I'm Michael, Senior Director with JLL's Logistics and Industrial team in Singapore. Today, I would like to share with you a snapshot of Singapore's warehouse and factory property sectors for the third quarter of 2023. Starting with the logistics and warehouse sector, Singapore's logistics and warehouse sector continued to see firm demand, limited supply and rent growth. During the quarter, island-wide warehouse vacancy rate fell to 8.7%, its lowest level in 3 quarters. The fall in the vacancy rate was due to firm demand amidst limited supply in the market. There were no newly completed multi-tenant warehouses since the completion of 2 Pioneer Sector 1 in the first quarter of 2023. Though several logistics service providers held groundbreaking ceremonies for their new built-to-suit facilities in the third quarter 2023, these were mainly for own use and is slated to complete in the year 2025. When ready, the 4 projects by AP Moller Maersk, DB Schenker, DSV jointly with Logos, and Chazen Logistics Services will add over 2.3 million square feet of new logistics and warehouse space to the island-wide stock. While there are some possible future space options from landlords which are subjected to non-renewals, these come with high asking rents. As such, most tenants are opting to renew their existing premises but at a higher rent reversion. The tight vacancy has supported the 10th consecutive quarterly rise in average logistics and warehouse rent island-wide and at a faster than expected pace of 1.9% quarter-on-quarter in the third quarter of 2023. In the coming quarters, geopolitical uncertainties could continue to disrupt supply chains, keeping business cautious and inventory holding elevated. This will support demand for warehouse space. However, new space options are expected to be limited until 2025, when over 1.6 million square feet of supply will come from 3 new multi-tenanted warehouse developments at 36 Tuas Road, 51 Benoi Road, and 5 Toh Guan Road East. As such, we expect the vacancy rate to remain tight in 2024, which will drive further rent growth. Moving on to the factory sector. JTC's data for the third quarter of 2023 showed that rents for multiple user factory premises have risen for the 12th consecutive quarter. However, the quarterly growth rate has slowed down for the first time in 7 quarters to 2% in the third quarters of 2023 compared to 3% in the second quarter. Generally, industrialists have become more cautious with regards to new space requirements due to the prolonged macroeconomic uncertainties and weak manufacturing sector performance. The completion of several major multi-tenanted developments in 2023, such as Maple Tree High Tech Park at Kallang, Tai Seng Exchange, and 7002 Ang Mo Kio Avenue 5 have also increased competition among tenants and kept rents competitive in the third quarter of 2023. With macroeconomic conditions expected to stay challenging at least until the first half of 2024, we expect industrialists to remain cautious and to be rent sensitive, and this could potentially slow the pace of rent growth in the coming quarters. Thank you for watching this quarter's Logistics and Industrial Real Talk. We'll see you next quarter.